We're here today with Terry Depew, the Business Development Specialist from Citizens and Northern Bank in Athens, PA. And we're going to be discussing general loan information for small businesses. Okay, Terry, where would a new business owner start when needing a loan?
First of all, you should make initial contact with the bank and the person that would be handling your account. I always try to set up an initial meeting and not try to have the person bring in all the information that might be required in the first initial setup. We need to talk about what you need to borrow, the amounts that you need to borrow, what the business is for, and also we need to find out the terms and things like that, and the collateral that you have to offer and any down payment that you might have. So I'd like to just generally sit down and discuss the whole overall picture first before we set anything up in specifics.
And what information is needed for a new business owner when applying for a loan?
First of all, we'd like an application, which we can check the credit background. Secondly, we'd like either any personal financial statements that they might offer, which would show their net worth and what they call a secondary source of repayment, other than the collateral that they'll be pledging for the loan. Tax returns, a financial statement from the business, and if you're buying an existing business, we'd like to see tax returns from the existing business, and we'd like to see also any financial statements and things connected to that business.
And is it important, Terry, for the small business owner to have a good personal credit history?
Very important. The better the credit of the individual borrowing, and also the better the collateral and the better the structure of the loan, the better the rate. And it's much more important to have good credit to come in, because you'll get a much more favorable rate. And now with conditions the way they are and credit being so tight, it's harder and harder now because of the federal government's regulations and so forth that we have to look at. Cash flow means everything, so the business basically has to show that it can pay for itself and pay for the new borrower's payment plan.
And how much would a new business owner be able to borrow? And will collateral be required when they borrow?
In most cases, probably. Like I say, collateral the banks will look at as a secondary source of payment. Cash flow being the income from the business would be the primary source. Normally the banks would like to see 25 to 30% down of the borrower's own money. Or they sometimes will take additional collateral.
Okay. So you're saying that like if a person wanted to borrow, say, $100,000, what would the amount be that the bank would actually give them?
The bank would look at lending you $70,000 to $75,000 based on the conditions of the business, based on the financial statements. If things looked a little tight, they might ask for maybe 30% down, or they might ask that you pledge another. If it's a building and assets, inventory and equipment, they might ask for a little additional collateral to make up the shortfall that the business isn't generating the income from.
And if this is actually a brand new person going into business and purchasing a building, what type of thing could they use for collateral?
They can use their home, they can use any family assets, they can use, if they have certain type of investment accounts, we can use those. Some pension plans we can't. But there's other additional collateral that we can use. We can take an assignment of a life insurance policy, and various things like that.
Oh, interesting. How important is it, Terry, for a good business plan when a business owner is applying for a loan?
It's very important. It's not only important for the bank to see that you've done your homework, but it's also important for the individual that's borrowing the money to understand what they're getting into. And by looking at how the projections are going to work out, it just gives you a more overall picture of what you're getting into and how you and what you got ahead of you to look forward to.
And you had mentioned earlier in our conversation about the economic times. Is this a good time, would you say, right now for people who are wanting to open a new business?
I think it's probably tougher for people to qualify credit-wise. Banks are becoming more rigid in their standards, but with interest rates being so low and so many businesses that are struggling, someone that could come in that has a little more experience and maybe has a little more cash behind them, it's a good opportunity to maybe make a business a lot more successful and be very successful with a business. So I think, yes, it's a good time, but also it's a bad time because of the credit restrictions right now.
Right. Well, Terry, I thank you so much for meeting with me today, and I hope that some of the viewers that may view this today will come to your bank and apply for some loans.
We'd like to see them. We have lots of commercial lenders here for businesses, and we'd be glad to talk to them.
And thank you again so much.
Thank you, Karen.